Hello, everyone. Welcome back to the channel. It's Matt with Green Bar Trading. Another week outlook video here for you guys. If you just take the 2 minutes, 2 seconds to hit the thumbs up for me, it helps the channel grow. And we are almost approaching 1,000 subscribers. So very, very grateful to everybody that has subscribed. All new subscribers, all old subscribers, everybody that has helped the channel grow. And by hitting that thumbs up, you definitely do help us grow the channel and reach way more traders, because that is the goal. Now, with the week outlook videos that I make on the weekend, we like to look back at what happened last week with market context to see where we're going, possibly this week coming up. Now, it was very volatile, to say the least, last week. And I'm going to get to sharing my screen here with you guys in a second. But with the Fed last week on Wednesday, the market reacted in a way where it sold off, all the equities sold off, but then rebounded just to sell off again. And the 10-year Treasury, when the news came out on Wednesday that inflation was looking a little bit more than they thought, and the Fed was going to have to raise rates possibly earlier than expected, the 10-year Treasury, which you would expect, shot up. The yield went into the, I think, 1.56, which is still super low. But then on Thursday and Friday, the 10-year Treasury yield absolutely tanked. And the 2-year Treasury actually went up, which flattened the yield curve, which is absolutely horrendous for all financial stocks. So the banks took it on the chin. They really had a rough week. If you flatten the yield curve like that, where the 2-year yield goes up, the 10-year goes down, that doesn't help banks, because banks, well, they kind of like to borrow on the short term and they lend on the long term. That's how they make their money. So the market last week was acting so unpredictable, really. I mean, that's the bottom line. It acted really unpredictable. And that's why whenever the Fed has any announcements or any, data coming out or meetings, anything like that, you just want to sit on your hands. Wait where price ends up coming out. That's the bottom line, because you really don't know where it's going to come out. So anyway, guys, let me get to sharing the screen here for you guys. I'm going to start with the SPY. Now, I know that this looks crazy with these lines. Don't worry about that. This is not important on this time frame right now, but this is the daily time frame, which is each one of these candlesticks is one trading day. So, and this is the whole year right here. You have the start of 2021 all the way to where we are today, June 21st here. All right, so every pullback that we saw, now the SPY, for those of you that don't know, it's just an ETF and it follows the S&P 500. So every pullback that we saw this year, check out the RSI. And I notated it here with this green dotted line for you guys to see. Every pullback comes to roughly 40 on the RSI. And you can see here, this day on Friday, we came right back down to that level that we saw each pullback. You had a pullback here, you had a pullback here at the beginning of March, you had one in May, and now you have one in June. And this is what I look for. I look for specific patterns that maybe the computer algorithms are also plugging into their data when they take trades long, when they take trades short. Well, every time it hit this line here on the RSI, price action took off from there. Now, that's not to say that's going to happen again, but that is just what I look for, things like that. So now let's just dial it down to a little bit of a smaller time frame here. Hang on one second. We're just going to remove that for you. Now, this is easier to see. The thing that I don't like is that we broke this ascending trend line for the overall market. This is not something that you like to see, because once something breaks an ascending trend line, it now starts a new trend. So where is that new trade range going to be? It's very difficult to now predict. Over here, I was able to predict moves pretty easily because we bounced off of this trend line and we had a very specific range. I mean, right here for almost a month, we were trading within a 1% range on the S&P 500. Well, on Thursday and Friday, that totally got erased. And now we broke the ascending trend line. So now, you know, where does price go? Do we start to come up from here? I mean, we're bouncing off of, you know, this one level that I have that hasn't been tested yet. You know, we'll see how this level holds up on Monday and Tuesday. But I don't really have that much faith in this level yet anyway. We got to see, you know, where price action goes. Do we go up because we're at that low level on the RSI? I don't know. Do we come back down to the beginning of the move that happened at the end of March? Well, that would be 385. I mean, that's how extended the market has gotten in a very quick period of time. So can it also be, which is what I notice here, if we just bring this up, this was a 5% pullback in May. So the beginning of May had a 5% pullback, and then we had a 5% pullback right over here as well. Can it be another 5% pullback? Well, that would bring us to roughly the 406, 405 area would be a 5% pullback. Is it possible that that's all this is? I don't know. We're just going to have to wait and see. But this is what happened last week. Once the Fed started talking, the price action got all crazy. And, you know, that's just what happens when these types of things go on. So now looking out at this week, we really have to see where the buying comes in. You know, do financials make a recovery? The 10-year Treasury yield. This is a key one. So the bond market, I feel like that's really going to give us a nice directional compass to look at. It does seem like the market, especially the tech market, is very, very tied to the 10-year. You saw on Friday and the NASDAQ all week, it was the only index that really held up with everything else selling off like crazy. And that's because the 10-year Treasury yield just tanked again into like the 1.40s area. So, you know, we're just going to have to see with that. This could just be a 1 week thing. It could be a few days more until the buying steps in. We're just going to have to wait and see. But this week we have a couple of earnings coming up. We have Nike, I think, on Thursday. We have FedEx on Thursday. These stocks can give us some nice trades at the beginning of the week. Especially, I'm going to be looking at FedEx, you know, for sure. Other than that, so we have, you know, what happened last week, the potential with the RSI for this week. Other than that, To be totally honest, I have nothing. I have no other stocks that I'm really looking at to buy. The charts, most of my charts broke trend lines. Most of my charts, most of these stocks, well, they are not looking very good. So most of them broke, key levels and key areas that you didn't like them to break. So I really don't know what I want to look at. This is American Airlines. They broke down um, key ascending trend lines all over the place, just getting broken everywhere. Carnival Cruise Lines. This one had a nice breakout, did not hold up to what was previous resistance, did not turn into support, but this could still hold up to its ascending trend line. We'll have to see about that one. We could take a look at AMC. This one held up very nice. This was an excellent, and you can just tell here, this is an intraday trend line, but you can tell here we are in a range the last 3 or 4 trading days with this green trend line here, and price action on Friday came right down to it. It actually had it at the top. So you have the 65s as resistance, and you have about the 57s to 55s as support right now. But AMC did hold up. Let's see if there's anything else here that we can look at. You have an ascending trend line here that we can see if that holds up. So we're going to come into a nice wedge here on Monday, Tuesday. We'll see which way that this breaks. The tighter that this coils up on AMC, we're going to either go one way and test new highs, or we're going to dump. That's usually what happens with these things. But this is a bullish ascending wedge here. So this is a nice chart setup for AMC this week. Definitely going to be looking at this stock. Other than that, I think PayPal, let's take a look at PayPal. Okay, so PayPal had a perfect breakout of previous resistance at the 277s, and that had a nice breakout. We can see with PayPal, does it retrace and test where it broke out? Maybe you could get long at that area on a retracement with a stop set just below that area. So PayPal I'm going to be looking at as well, all the financials and the 10-year treasury. These are things that I'm going to be watching. The 10-year treasury yield, the yield curve in general, to see if that gets a little bit better. The Fed, we'll see if there's anything else that comes out of that. I think Powell has some meetings this week. There could be some more communication coming out about that. Other than that, that's all I have for you guys. I hope you enjoyed the video, and watch that RSI on the daily chart for the SPY. We're coming right back down to that level that we bounced at for 3 or 4 other times. So keep an eye on that. Anyway, guys, I will see you guys on the next video. Hit the thumbs up for me if you enjoyed the content, and everybody have a great weekend.